Hello and good day, everybody. This is the Forex Fundamental Analysis for August 10th. I'm Yohay Elam, and the webinar is brought to you by OctaFX. OctaFX, an award-winning Forex broker that has one of the lowest spreads in the industry. Let's begin with a few disclaimers, some housekeeping. Trading foreign exchange and margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And hypothetical trading disclaimer. Then all the information provided here in this webinar is general market commentary and does not constitute investment advice. A few quick words about myself. My name is Yohay Elam. I'm a Forex analyst. I used to be a retail trader and a computer programmer. I founded Forex Crunch back in 2008, and I focus there and also here on fundamental analysis. Of course, we'll touch also on technical stuff. So today on the agenda, we have the stories moving markets, the next event to look out for, and we'll do that with following key levels of support and resistance. And the currencies we'll cover are, of course, we'll start with the US dollar and we'll focus on dollar yen, move to euro dollar, continue with pound dollar, and then two commodity currencies, the Australian dollar and the Canadian dollar, with the relevant currency pairs against the US dollar. So the top stories in markets. So if last week we talked about weakness in the US dollar, the US dollar made a big comeback. There are a few reasons for that. Another story that is also helping the US dollar against some currencies, but not against the Japanese yen, is the tension around North Korea. As you may have heard in the news, President Donald Trump promised fire and fury against North Korea. They responded by saying they have plans to attack the US base in Guam. Anyway, tensions are much higher. In times of trouble, even if the troubles are close to the shores of Japan, and North Korea threats Japan, a US ally as well, the Japanese yen strengthens. The US dollar is a secondary safe haven, so the US dollar is stronger against commodity currencies, for example. But the strength of the US dollar began with the strong jobs report on Friday. We'll get into the details very soon. Some natural profit taking as well. We had quite a few long weeks of sell-off in the US dollar due to political stuff, economic weakness, you name it, and correction is always necessary. Forex is never a one-way street. And in general, what we're seeing in markets is there are fewer events because it's summertime, less political drama after, well, quite a few weeks of that. But it doesn't mean we don't have movements in markets, doesn't mean we don't have volatility. So the main event we had last week on Friday was the non-farm payrolls. 209,000 jobs were gained in the United States, better than expected, around 180 were expected. Wages are up basically as expected, 0.3 month over month, and 2.5 year over year, so it's stable. Okay, so it's not an acceleration, it's not really good news, it's not an uptick, but at least we are not seeing another downfall, we're not seeing another disappointment in this key figure. Unemployment rate dropped to 4.3 as expected, and there were no significant revisions. So all in all, it was quite a good jobs report, and this triggered the greenback comeback across the board against the yen, against all currencies. Okay. Other US figures were also quite okay. Well, we'll start with one that missed expectations. The ISM non-manufacturing PMI missed expectations. That came before the non-farm payrolls. And did not serve as a good indicator, dropped to 53.9, but factory orders are up 3%, good news. Trade balance is stable, nothing to worry about from that angle. And what we had on Tuesday is a figure that is watched by the Fed, but is lagging, usually gets overshadowed in the mix of other events, but this time, relatively light calendar in the summer, and we had a big beat here. Much better than expected number for the U.S. economy, 6.136 million job openings annualized. So we had a strong response, an acceleration of the U.S. dollar buying. Okay, so this sort of strengthened the trend. And also unit labor costs revised to the upside. That was released yesterday. Good news as well for the U.S. dollar. But the main figures that were supportive of the greenback were the jobs report on Friday and the jobs report on Tuesday. Okay, what are the next big events to look out for? So today at 12:30 GMT, all times are GMT, we have the producer price index, sort of a secondary inflation figure, and the weekly jobless claims, which have been very, very stable of late. More importantly, today we have number 3 at the Fed, Bill Dudley, the president of the New York Fed. He'll be speaking at 2 GMT. He was considered a dove, but he moved more to the center, more to the hawkish side. Let's see if he's optimistic on jobs and also perhaps on inflation, or like some other Fed members, disappointed with inflation. And on Friday, we'll get the new, fresh inflation figures, the consumer price index for the month of July. Watch for the core inflation, which is at 1.7 in the past 2 months. Let's see if it moves up a bit or down. Have no idea where it'll go, but it's a key event. Inflation is becoming more and more important because that could determine the next move of the Fed. Okay, we also have on Friday another Fed member, Kaplan, speaking at 1:40 GMT. And if we look already to next Friday, we have consumer confidence. Okay, let's talk about other events. Next week, we have retail sales on Tuesday, very important, of course, because the US economy is all about consumption. We have the New York Manufacturing Index as well on Tuesday. On Wednesday, we have housing data, building permits, and housing starts. For a meaningful reaction, we need both figures to move in the same direction. Sometimes they just offset each other. One comes out above expectations, the other below expectations, so watch out for that. And the big event for next week is the Fed's meeting minutes at 6 GMT. These are minutes from the July decision, in which the Fed did not change interest rates, in which they were considered relatively dovish, even though I examined it so many times, and it was basically trying to tell us we're not making any changes now, we'll give you more news in September. But perhaps the meeting minutes will reveal something new. And also something to watch out for. Well, early in the week, we have Japanese GDP. For a change, we have a meaningful event coming out also in Japan. Okay, dollar yen in general. It stabilized in range above 110, but then we had this North Korea issue, which sent it down. All in all, I see the US dollar as remaining weak despite the significant correction, especially against the yen, especially with all these geopolitical issues. Okay, the Bank of Japan seems unable to keep the pressure on the yen. Of course, they want a weaker yen, but with the weakness of the US dollar, again, we had a correction, but it's not that. I don't see it as lasting that long. And with the North Korean tensions, they seem a bit helpless. Okay, 108.10, still far away from current levels, is critical support. All right, now let's look at the charts and show you everything we've been talking about. So we're using, as always, the OctaFX MT4 platform. This is dollar-yen chart, currently just hugging the 110 level, okay? We've seen the pair rise here on the uptrend, then fall. Now it's stabilizing. It already dropped below 110, well, basically at this level at the moment, looking for a new direction. My tendency again is to the downside. Let's discuss all the levels from top to bottom. So at the very top level here we have 114.30, followed by 113.60, 112.60, 111.80, then 110.70, which is the current level of resistance, followed by 109.90, okay, just under the 110 level, and it was only temporarily breached. Following that, we have 108.80, which began the uptrend, and 108.10, as aforementioned, very critical support. Okay, so that's dollar-yen, and let's continue to euro-dollar. Euro-dollar, it's basically off the highs because we had a greenback comeback. We had the US dollar strengthening. The big event for the euro is already causing tension. It's in 2 weeks' time, the Jackson Hole speech by Mario Draghi. We had some figures coming out of Europe. They weren't that big like last week. We had Centex investor confidence, stable at 27.7. We had German trade balance, also stable, 21.2. And in general, European politicians are on holiday. So when President Trump, the United States, is on holiday, he still tweets, he still Because press conferences, European leaders, it's much quieter over there. Okay, next big euro moves. Looking already to next week, we have a first release of GDP, of the overall output of the economy from Germany, the largest country. We have the business survey, the ZOO one, could have some influence. After that, we have the Eurozone GDP, but German GDP has more influence, as we've seen in the past. On Thursday, we have the final inflation numbers. They came out above expectations in the initial read. They gave a boost to the euro. Let's see how the final numbers shape up. In general, euro-dollar, finally, we had a significant correction. So euro-dollar jumped above 119, couldn't hold that strength and fell to support. We'll show that on the chart very soon. The ECB and the Fed are balanced for now, but well, doubts still exist about the Fed hike, as I mentioned before. Politics look more stable in the Eurozone. That's a clear advantage for the euro. After the French elections and ahead of the German ones, Chancellor Angela Merkel is leading in the polls by a wide margin, and that's what markets want to see. Inflation growth looked more balanced. The Eurozone had an advantage, but the US economy is catching up. Okay, let's look at the charts. Show you what we have in euro-dollar right here, the OctaFX MT4 platform. So we had this move, let's zoom in just a bit, all the way to 119, and from there we had a downfall. Now we're just above support at 117.10. 117.10 was the high level seen in August 2015, so it's the 2-year anniversary for that, if you wish. And that's where the pair finds support. So we do see a slide, we do see significant correction. We had a long period of rises. Now we're seeing some kind of correction, but we're not losing this critical support, at least not for now. So the levels here from top to bottom, 120, the very round number, significant resistance. 119.10 follows just the recent high. 118.70 used to be a high well back in 2010 and served as a cap also now. 117.10, very strong support. Then 116.20, that was the 2016 high. 114.85, 113, which kept the pair for a long time before the big break to the upside. And, well, 112.30, the next line to the downside. Okay, let's continue. We talked about the euro. Let's move to the UK. So we had the pound losing ground because of the dollar strength on front payrolls, but also because of the Bank of England. The Bank of England voted against raising rates by 6 to 2. That was basically as expected, but perhaps markets wanted to see a bit more hawkishness after the hawkish speech by Mark Carney in Portugal a month ago. The Bank of England seems in no rush to raise interest rates, so that was a bit more dovish. That hurt the British pound. Consumers in the UK are cutting down on spending because of higher prices, political uncertainty. Not everything is bad. House prices are a bit more mixed. They're rising month over month, but weak year over year. The next big events, on Thursday we have industrial output and trade balance coming out actually very soon. More importantly, next week we have 3 big events. We have the most important one on Tuesday, inflation data. Let's see if it continues rising and it could trigger a more hawkish Bank of England. Or what we've seen last time is that inflation actually fell to 2.6%. On Wednesday we have the jobs report. Wages were falling for the past few months, and that's a source of worry. But now they're expected to pick up a bit. And on Thursday, the retail sales report. Let's see if consumers, it's quite a volatile figure, so we might see if consumers, maybe they bumped up their buying this time, but the general trend is of weaker consumption in the UK. Okay, and a bit about the Brexit negotiations. There were reports in the British press that the UK agrees to a divorce bill. That means paying something like 40 billion euros to the EU for its commitments. That could be positive because, not because of the payment, but because it would advance the negotiations. But the British government, well, denied it for now. Also, the British Prime Minister, as far as I know, is on holiday. And everything is a bit on hold now in the summer in terms of Brexit negotiations. everything will intensify in the autumn when we have a more significant round of Brexit talks, and we have the party conferences, the Conservative Party and the Labour Party. So everything will intensify in the autumn. Okay, pound dollar, good, bad, and ugly, as they like to do it. Hopes for a softer Brexit because of this divorce bill. That's a good thing. The bad is, well, economic weakness. Growth is significantly slowed down in 2017. And the ugly, well, the mixed messages from the Bank of England. Mark Carney has a different message each time. Currently, it's negative for the pound. It might change if inflation picks up even just a bit. So that really is doesn't make life easy for pound traders. All right, let's look at the charts. Pound dollar. So here we are, suffering a downfall, and the pair extends its losses as we speak. 129.54 at the moment. So we had this big climb to the upside thanks to the US dollar's weakness. Things have changed for the US dollar, positively for the dollar, and for the pound things have worsened. So we're seeing more than a meaningful correction, perhaps a change of course after this very, very gradual rise. Anyway, levels from top to bottom, 133.50 if we have something really positive, 132.40, a recent high, 131.20 used to be a high in the past, and also right here in July, 130.50 just above the 130 line, under the 130 line, a line that, well, has been broken just now, 129.75, that's a bear sign. Then we're followed by 128.90, 128.20, and 127.20. So the levels to the downside, of course, are more familiar. All right, let's continue with the Australian dollar. So we had mixed stuff in Australia. Retail sales beat expectations with 0.3%, but the Reserve Bank of Australia seems hesitant. They have not upgraded their outlook in the recent decision last week. But again, things are looking a bit positive. So we had business confidence rising to 12 points. That goes hand in hand with other good economic data like retail sales. Chinese import growth slows to 14%. So, but it's still very strong growth for Australia's #1 trading partner. So all in all, it's quite mixed for the Aussie. Sorry. Let's continue. The next big events we're looking out for later today, tonight, early tomorrow, we have Governor Philip Lowe of the Reserve Bank of Australia. He'll be speaking, and he could move markets. On Monday, we have Chinese industrial output, just very early to begin the week. On Tuesday, the Australian meeting minutes, the RBA meeting minutes. Last time, they had more impact than was expected. So we had sort of a dovish statement and then followed by hawkish meeting minutes. So will these meeting minutes on Tuesday push the Australian dollar higher? We'll wait and see. Also next week on Wednesday, we have the Australian wage index. Salaries are important also in Australia. And the big event next week is the Australian jobs report. Like in many other countries, the jobs report is very important. Jobs reports in Australia have been quite positive in 2017. So Aussie is holding on to the highs, sort of dropping just a bit against the US dollar. It had some altitude sickness, I would call it, above 80 cents, but it isn't falling that fast. And volatility is looking good. So volatility was stuck for quite some time. Now it's back. Let's look at the charts. So here we are. Let's zoom in just a bit. We had this move above 80, reached 80.65, and then we had a downfall. All in all, things are looking, well, I would see it as a correction, not as a downfall for the Aussie. All the levels, 83 if we really have a rally, 81.65 also up there in the sky, 80.65, the most recent high, around the level of 80, remains a barrier, followed by the downside. I'm looking at 78.40, then 77.50, 77.10, and 76.35. Okay, and let's continue with the Canadian dollar. Dollar CAD, here we're seeing a big correction, much bigger than in the Aussie, much bigger than in the Euro. So Canada gained almost 11,000 jobs. It came out a bit under expectations, but on the other hand, the unemployment rate fell to 6.3, and the reaction was the weaker Canadian dollar. Figures in Canada are not that bad. Canadian IV PMI looks strong at 60 points, and Canadian housing data released yesterday beat expectations. Okay, we had a beat in housing starts and also in building permits, but the reaction was a fall in the Canadian dollar. Now, as we talked in webinars, the Canadian dollar has periods of weakness and of strength. We're now seeing it as very weak. If it not only ignores good data but also falls on good data, looks like markets want to sell the Canadian dollar on every opportunity, even when there's no opportunity there. Okay, so a lot of weakness in the Canadian dollar after long months of strength. Next big Canadian events, we have new home prices today. Next week, foreign securities purchases, the flow of funds into Canada. And Thursday, manufacturing sales. Doesn't sound that important, but in Canada it does move the Canadian dollar. And looking already to next Friday, we have the retail sales report and inflation, both on the same day at the same time, Friday 12:30 GMT, and both are of course top tier. Inflation is more important because it determines the next decision of the Bank of Canada. So dollar CAD in general, it bounces big time. Big change from fall. The Bank of Canada's bullishness, remember they raised rates recently, it's fading away. I believe the downtrend could resume because the Canadian economy is looking good. Perhaps the Canadian dollar just went too far, too fast. And let's see this big turnaround on the charts. So dollar CAD, here we are. So we're seeing it for many long days. 1, 2, 3, 4, 5, 6, 7, 8 out of the last 9 days, the Canadian dollar is falling against the US dollar. Levels from top to bottom: 131.60, 130.20, 128.50, 127 sharp, 125.80, and 124.60 before the last line, which was the recent low of 124.15. Okay, so we had quite a big turnaround. We dropped under 124.60, which was critical support, but that was a false break to 124.15, and since then we're on the move to the upside and above 127. I would say the current range 127 to 128.50. Okay, so that's it for today. Thank you very much. Comments and feedback are always welcome. I wish everybody a safe and successful day in markets, and if you're going on holiday, enjoy your holidays. And that's it for now. See you soon. Thank you, and bye-bye.